Let's talk about another mover today, and that is Verizon, raising its guidance in its Q3 earnings report out this morning. The outlook for the year looking a bit better. The telecommunications company saying that it expects free cash flow to be above $18 billion. That's about $1 billion higher than its previous guidance. The company also reporting a beat here on the bottom line, but it was lower than what the results that we got a year ago. You're looking at revenue of just around $33.3 billion, adjusted earnings per share of $1.22. When you take a look at some of these subscriber numbers, they added a net 100,000 mobile phone subscribers during the quarter. That blew past the street's estimates of just below 70,000. That gain being led by the additions that we saw in its business group. The consumer group, on the other hand, lost 51,000 mobile customers, easing the decline that we did see from the previous quarter. But all in all, we're looking at the street's reaction with shares up just about nearly 7% initially on this beat, the better than expected results that we got, and also how this positions Verizon amongst AT&T, T-Mobile, the other large players within the space.
It's going to be a big question of what this company has to say as well to perhaps assuage any fears that may still persist among investors who are looking at this year-over-year slippage that took place, and particularly, and you had alluded to this a moment ago, that total Verizon consumer revenue down 2.3% year-over-year, but they did see growth in service and other revenue offset by wireless equipment revenue declines here. So all in, when you're thinking about how this company is going to be able to bring on more consumers, it's not just going to be on the flashy devices, but I think for a cautious or a conscious consumer who's cautious about how much they're incrementally spending, how much more they're spending on some of their plans for just connectivity, for whether it's wireless service or for some of that in-home internet and broadband service as well. That's where, even in a discretionary environment where there are necessities versus that connectivity, necessity of connectivity, of course, but then some of the more discretionary purchases, this is an extremely staple service and a necessity in so many households. But even as the necessities get even more of kind of that stringent look across the household balance sheets, that's where a company in Verizon and some of the other telecom services, you could watch to see what that relationship looks like with the consumers and how the pricing strategy also perhaps gets a little bit more of a revision here to make sure that there isn't as much churn, and churn going to be a big topic of focus here, I imagine, within the call taking place today here too.
Yeah, and all that has been pressuring Verizon shares since the start of the year. The stock was off just about 20% going into this report, so some excitement, at least today, on the heels of these results, but certainly larger headwinds still remain.